We have seen many sell-off before, but this stock market sell-off we saw yesterday is totally different because we are crashing right into the most dangerous CPI results of the year so far. So today I am going to break down what is causing this sell-off, and we are also going to look at the important earnings of the day from Coinbase crash to Applied Materials massive growth ahead. Now, let's take a look at how the indexes perform. So, it's not looking good heading on to Friday the 13th tomorrow. So, Dow slide 600 points, and basically none of the indexes were spared. So, even Nasdaq and the Russell 2000 felt close, actually more than 2%. And we saw the volatility index went all the way up, additional 18%. So, this tells you how uncertain the market is right now. And in fact, what we saw yesterday was actually worse than last week as well. So so what actually happened, right? And during the day, Nasdaq 100 was actually down 1.7% right in the middle of yesterday session. And what was actually dominating the headlines? It was actually the AI fears, where not only tech companies were selling off, we actually saw it in many different industries. We saw it in shipping, freight stocks. It basically is in every corner of the market. Anything that people think that AI will disrupt, it is all selling off. And to show you what I mean, this is a stock heat map of yesterday's results when the market closed. You can see it was totally red, only a handful of green, for example, in Walmart, but a whole big portion, good 80% of what we saw on this screen here, it is all red, especially the mega cap. So massive sell off, regardless if they were remotely or actively involved in AI. Like Apple had a 5% drop, which was one of the biggest daily drawdowns so far. Now, we even saw it in precious metals, in gold and in silver. So nothing is spared. Okay, and we actually saw the same volatility from last week. And if you are wondering, okay, what exactly is the reason? We know that there is AI fears. What exactly was the fear, right? So let's recap and understand what is actually causing all of this mayhem. It all boils back down to new product launches, specifically new AI tools from the like of Anthropic and from the like of OpenAI. Now, they were so powerful that, and actually it was already announced last week. Like you look at the date that it was announced on February 5th and on February 3rd. And Wall Street suddenly remembered and asked themselves that, hey, wait a minute, if AI does everything, what happens to the software companies? What happens to the freight companies, the logistics companies, and the office building that we own? So, this is the fundamental question that was being asked in every trading desk across the New York Stock Exchange yesterday. So, the idea is that if productivity is automated at that level, right, traditional business model for any companies, logistics, SaaS companies are immediately under fire. So the market is now pricing in the risk that all of these legacy companies, right, like even though they might win today, the past few years, tomorrow they are going to get loose and wipe out. So this was the main reason of what caused the market to sell down yesterday. But amidst this sea of red that we saw, there were actually winners, losers, as well as confused stocks. So we need to talk about a few things. Okay, the first one is Coinbase disaster. We're also going to look at two other companies that are involved in AI infrastructure. So the first one is Coinbase, right? And we all know Coinbase from being that crypto exchange. So they actually reported last night after hours when on the day itself the shares were down 8%, and it did not look good, right? They missed earnings estimates, and this was also because of how the crypto downturn was weighing on the trading volume. So revenue was expected to be at 1.83 billion, but it actually only came in at 1.78, which was a 3% miss. Now, the earnings per share was expected to be positive, but last quarter it was negative, right? They actually missed by 359%. So this was a huge miss. Okay, so this was why the market was so concerned and everyone was starting to get very worried that whether will Coinbase survive this thing that is happening to the market now. And when we look at what the CEO said, Brian Armstrong, right? He basically said that he tried to focus more on the good side, right? Which is what most businesses will do. And he tried to make people to reframe and look at what his priorities are next year. Number one, which is the everything exchange. trade from every asset class from one single account. And he even said, and I quoted, that everything exchange is working, trading volume and market share doubled, right? And he said that his strategy is working. But for us as investors, right, we have to look at the bottom line. Because if this strategy is working so well, why is the earnings per share dropping? Why is the revenue dropping? So one thing to note is that for the earnings per share, right, even though it looks bad, a portion of it comes from unrealized crypto holdings, which is from Bitcoin, from Ethereum, from other coins that Coinbase hold. That is why how Coinbase moves is directly related to how crypto moves as well. So it's important to see it from both angles and not just the fundamentals. Now, the reality in crypto is this. We are in this thing called a crypto winter. And it's not just any crypto winter, it's crypto winter 2.0. Okay, so Bitcoin, you can see we are struggling at 66,000, and Ethereum is now at 1.9, it's fallen below $2,000. And basically, the retail traders who are providing this kind of high margin fees are not active. As we saw over the past few weeks, a lot of leverage traders actually got wiped out from crypto. So until we start seeing crypto asset prices going up ahead again, Coinbase is essentially what we call a toll booth on a very deserted highway. And the next one is Nebius, right? Nebius is actually the most fascinating story of the week. So they were formerly known as this company called Yandex, which is the Google of Russia. And they pivoted to Europe and then they reported earnings. But as you can see, right, they actually missed the estimates for their fourth quarter, even though they beat on the EPS, but the revenue miss. Even though it was a 500% revenue growth, but this is considered a miss. So this is what we call hyper growth, even accelerated from their 300% previously. But the question is, why wasn't there much reaction? It was because of the price tag. It was because of what they were guiding for their 2026 capital expenditure. So what they guided is 16 to 20 billion. And they said you can see that they report significant increase in capital spending due to GPU and data center costs. And what the CEO said, he's basically they are taking out every single dollar that they have and they are just buying GPUs after GPUs. And he also said they actually sold out of capacity in Q3 and Q4. And even before, this is important, even before they bring the capacity online, it is often already sold out. So Nebius is not really a software company. They are like this utility company that provides AI infrastructure, especially in this AI age. And by building data centers all across Europe, right, this serves as an alternative to those that are located in America. So this is a very interesting thing because this recent pullback might be a long-term opportunity, even though it's very important to monitor their cash flow as well. And next, so applied materials. So basically, if you want to know where smart money is going, just look at applied materials. The stock is now up 13% after hours. This was a clear winner for the earnings yesterday because while we saw software stocks crashing because AI might replace them, AMAT basically came in and said, I'm not going to be affected by it, right? They are basically building the machines that makes the AI chip. So imagine how integral is that, right? For the machines that makes the AI chips. Everyone needs AI chip. So they are way on the upstream side of this AI revolution. And when we look at their numbers, they beat earnings per share with about $2.38. Gross margin increase, cash flow is very, very healthy, and they have very, very strong guidance as well. Even though you can see the Q1 revenue was down 2% year on year, but the market still took it positively, right? Because they accept that everyone knows that you cannot build AI model of the future without the machines that AMAT sells. So their results actually prove that this hardware cycle of semiconductor of AI is still accelerating. And their CEO also said, right, that they are in a global race to build the foundation of the AI era. So this is where we see that capital shift more into the physical equipment required to run next generation model like what you saw just now, Opus, GPT, every single thing. So AMAT, right, is at that center of that spending. Now, moving on to what is coming up for today. Okay, today is the last day of the week, and we are going to start with the most important information that everyone is waiting for. which is the US CPI. Now, all eyes will be on this. So it's going to announce tonight at 9:30 p.m. This is in UTC +8. So if you are based on in the US Eastern time, it's 8:30 a.m. So the consensus now is for 2.5% to grow inflation rate called CPI and in year on year. And what I think is that a hot print, if it's above 2.5%, right, it might mean that the markets will tank further because it means rate cuts are further off the table. So expect to see the rate cut probability to drop even more. However, if we actually see a much cooler number, right? Example, if we saw it below, as below 2.5%. Now, these are where the market will take it positively because when inflation is lower, right, it gives that room for the market to think that the Federal Reserve can increase interest rates to spur the economy so that people will spend more. So what we saw being beat down, we might possibly see that sort of rally coming on. But regardless, right, either way, we don't know, no one knows where it will move to, but either way, be prepared for volatility. Now, for the earnings that's coming out for this week, there are a few that I am personally looking at. The first one is Moderna. Okay, Moderna is in the pharmaceutical space. So Moderna has been a falling knife due to a lot of regulatory fear and as well as declining COVID revenue. So the key thing that we're looking at today is their cancer vaccine pipeline. So if they can prove of they can spend efficiently with their money, we might actually see it bottom from there. Otherwise, don't be surprised if the slide continues. Now, the next one that I'm also watching is Wendy's, right? Wendy's is a fast food chain, and the fast food value wars are heating up. As you saw a few days ago, we talked about McDonald's, right? One of their best-selling items is their $5 value meal. And we also want to see for Wendy's, right? How are they matching up to McDonald's? And we also want to see whether it's actually killing their margins. Is their margins healthy or not? Okay, so this will be an indicator of how the consumer spending is actually holding up. Now, here's what I think, right? My overall take. So yesterday's what we saw for the AI-driven sell-off is not a new news. We saw that last week. It was the same news that dominated the headlines at the start of the week, which led to the whole sell down, the whole almost from the Monday to Thursday, and then Friday we saw a brief rally. So I think that what we saw yesterday was likely an overreaction as well. In fact, it was lagging, right? Because we've already seen how this played out last week. And while the threat to software is theoretically this long-term concern, not all companies will be affected by it. In fact, some of the companies will actually use AI and make their products better and even more stickier. And when what we saw from Applied Materials results, right, that this physical build-up of AI infrastructure is happening right now, and it is backed by billions of real spending, as we can see. But I would love to hear from you. Do you think this AI fear narrative is a legitimate reason for this sell-off? Or do you think this is just a bear trap to shake out weak hands before the next leg up? Let me know in the comments down below. That's all that I have for you for today's Stock Market Digest. So if you haven't already, be sure to hit that like and subscribe button below so you don't miss all the upcoming videos that I have for you. And I'll see you in the next one.